The real reason: China is investing billions in Africa. Across Africa, China's presence is impossible to miss. A railway cutting across the Kenyan countryside, a deep-water port moving thousands of containers every day, a highway linking major cities, a power plant supplying electricity to homes and factories, an industrial park creating jobs and attracting investment. For more than 2 decades, China has spent billions of dollars building projects across the continent, and the scale is extraordinary. No country has expanded its economic footprint in Africa as quickly as China. To some people, the explanation is simple. China wants Africa's resources: oil, copper, cobalt, iron ore, rare minerals, the raw materials needed to power the world's second-largest economy. Others believe something far more strategic is happening. They argue China isn't just buying resources, it's buying influence, building relationships, securing political allies, positioning itself for a future where Africa becomes one of the most important regions on Earth. But what if both explanations are incomplete? Because the real story doesn't begin in Africa. It begins thousands of miles away in China. In the late 20th century, China was transforming at a speed the world had never seen before. Factories multiplied, cities expanded, exports exploded. Hundreds of millions of people were lifted into the middle class. What had once been a developing country was rapidly becoming an economic superpower. But rapid growth created a new problem. China needed more energy, more minerals, more food, more markets, more trading partners. Its economy had become so large that it could no longer rely only on resources within its own borders. It needed access to the world. And while many Western countries were focused on established markets, China began looking somewhere else. A continent of 54 countries, a young and rapidly growing population, vast natural resources, expanding cities, and enormous economic potential: Africa. At the time, many global investors viewed Africa as risky. Some saw instability, others saw poverty, others saw problems. China saw something different: opportunity. And that difference in perspective would eventually change the relationship between China and Africa forever. For decades, Africa was often described as the continent of the future. The problem was that the future never seemed to arrive. Foreign companies extracted resources, governments signed agreements, promises were made. Yet in many places, roads remained unfinished, power shortages continued, and critical infrastructure lagged behind the rest of the world. Then China arrived with a very different approach. Instead of focusing only on aid, China focused on infrastructure: railways, ports, bridges, airports, power plants, industrial zones, projects that could be seen, touched, and measured. To African leaders facing enormous development challenges, this was attractive, very attractive, because infrastructure is the foundation of economic growth. The simplest answer is resources. And yes, resources are part of the story. Africa holds some of the world's largest reserves of cobalt, copper, lithium, manganese, platinum, and rare minerals. Many of these materials are essential for modern life. Electric vehicles, smartphones, solar panels, batteries, data centers. The technologies powering the future all depend on resources found in Africa. China knows this. In fact, China's rise as a manufacturing powerhouse depends on a steady supply of raw materials. A factory cannot produce without inputs. An economy cannot grow without resources. So naturally, securing access to those resources became a national priority. But if resources were the only goal, China could simply buy them. It didn't need to build railways. It didn't need to finance ports. It didn't need to invest billions in infrastructure. So clearly something bigger was happening. The real answer lies in something every great power eventually realizes. The future belongs to markets, and Africa may become one of the largest untapped markets on Earth. Today, Africa is home to more than 1 billion people. By the end of this century, that number could approach 4 billion. Think about that. 4 billion consumers, 4 billion workers, 4 billion people needing housing, transportation, energy, technology, healthcare, food, and financial services. For any country thinking 50 years ahead, those numbers are impossible to ignore. China isn't only looking at what Africa is today, it is looking at what Africa could become, a continent with some of the fastest growing cities in the world, a rapidly expanding middle class, and a young population at a time when many developed countries are aging, while Europe worries about declining birth rates, while Japan faces population decline, while China itself begins dealing with demographic challenges. Africa is getting younger, and in economics, young populations often mean future growth, future workers, future consumers, future businesses, future opportunities. From China's perspective, building relationships now could create advantages that last for generations, which explains why Chinese investments often appear in places that seem unusual at first glance. A railway may not generate immediate profits. A highway may take years to pay off. A port may require decades before reaching its full potential. But strategic investments are rarely about tomorrow. They are about positioning for the future. And China appears to be making one of the biggest long-term bets in modern history. A bet that Africa's economic importance will be dramatically larger in the decades ahead. But not everyone views this strategy positively. Because as Chinese influence expanded across the continent, a growing number of critics began asking uncomfortable questions. Were these investments creating opportunity or creating dependence? As China's presence in Africa expanded, so did the criticism, and the criticism centered around one word: debt. According to critics, China's strategy was simple: lend large amounts of money to developing countries, finance major infrastructure projects, then use that debt as leverage when countries struggle to repay. This idea became known as debt trap diplomacy. The theory spread rapidly. News headlines warned that African countries were falling into China's trap. Commentators claimed Beijing was using loans to gain control over strategic assets. To many observers, the evidence seemed convincing. Several African nations had accumulated billions of dollars in Chinese loans. Governments were borrowing heavily to fund ambitious infrastructure projects, and some economies were struggling under growing debt burdens. The concern was understandable. History is filled with examples of powerful nations using economic influence to achieve political goals. So, people began asking, was Africa witnessing a modern version of the same thing? The answer, however, turned out to be far more complicated, because when economists started examining the numbers, they found a different reality. Many African countries owed money to multiple lenders: Chinese banks, Western institutions, private bondholders, multilateral organizations. In many cases, Chinese debt represented only part of a much larger financial picture. This didn't mean concerns were invalid. Large debts can create serious risks regardless of who provides them. Poorly planned projects can become financial burdens. Governments can borrow more than they can realistically repay. But while the world argued about debt, another question received far less attention. What if China's biggest objective was never the loans themselves? What if the loans were simply a tool? Because when you look closely at China's global strategy, a much larger picture begins to emerge. A picture involving trade routes, supply chains, shipping lanes, industrial networks, and one of the most ambitious geopolitical projects of the modern era, a project known as the Belt and Road Initiative. Launched in 2013, the Belt and Road Initiative aimed to connect China to the rest of the world through infrastructure, roads, railways, ports, industrial zones, energy projects, trade corridors. The idea was to make it easier, faster, and cheaper for goods to move across continents. Africa became a critical part of that vision. Look at a map. Africa sits along some of the world's most important trade routes. Its ports connect Asia, Europe, and the Middle East. Its resources help power global industries, and its population is growing faster than almost anywhere else on Earth. From Beijing's perspective, Africa wasn't just another investment destination. It was becoming a key piece of a much larger puzzle, and China is no longer the only country that sees it that way. Today, the United States is paying more attention to Africa. Europe is paying more attention. India is paying more attention. Turkey is paying more attention. The United Arab Emirates and Saudi Arabia are investing billions into infrastructure and logistics projects. Everyone seems to want a seat at the table. The reason is simple. Africa is changing, fast. Every year, millions of young Africans enter the workforce. Cities continue to expand. Technology adoption is accelerating. Entrepreneurship is booming. And a new generation is reshaping the continent's future. In many parts of the world, populations are aging. Africa is moving in the opposite direction. By 2050, 1 in 4 people on Earth could be African. Consumers, workers, entrepreneurs, engineers, business owners. The scale is almost difficult to imagine. And where people see future growth, investment follows. But while the world debates what China gains from Africa, there is another side of the story that often gets ignored. What does Africa gain? Because African governments are not signing these deals simply because China asks. They are signing them because many of them face the same challenge: development. For decades, one of Africa's biggest obstacles has been infrastructure. Roads that don't connect major cities, ports that cannot handle growing trade, railways that are outdated or non-existent, power shortages that limit industrial growth. These problems slow economic development. They make business more expensive. They reduce opportunities for millions of people. This is where Chinese investment became attractive. Many African leaders looked at the offers and saw something tangible: a new railway, a new highway, a modern port, an industrial zone, infrastructure that might otherwise take decades to build. From their perspective, the question wasn't, should we work with China? The question was, if not China, then who? Because for years, many governments struggled to find investors willing to finance projects at the scale they needed. China arrived with money, engineering expertise, construction companies, and a willingness to move quickly. In many cases, projects that had existed only on paper suddenly became reality. New roads connected communities, ports expanded trade capacity, railways reduced transportation costs, industrial parks attracted businesses, jobs were created, economic activity increased. This doesn't mean every project succeeded. Some exceeded expectations. Others fell short. But for many African countries, the appeal was obvious. Development cannot happen without infrastructure. Factories need electricity. Businesses need roads. Exports need ports. Workers need transportation. Without these foundations, economic growth becomes much harder. But every opportunity comes with risk, and China's investment in Africa is no exception. Because despite the optimism, there are real concerns about what happens if things don't go according to plan. What happens if a country borrows more than it can repay? What happens if a project fails to generate enough economic activity? What happens if expectations prove too ambitious? These are not hypothetical questions. A modern railway can transform an economy, but only if businesses use it. A new port can boost trade, but only if trade volumes continue to grow. Infrastructure creates opportunity. It does not automatically create success. And that distinction is important. Some projects across Africa have delivered significant benefits. Others have struggled to meet expectations. The future remains uncertain, and that uncertainty is what makes this story so fascinating. So, was China right? That may be the most important question in this entire story, because beneath the railways, the ports, the loans, and the headlines lies a much bigger idea. A belief, a prediction, a bet on the future. China looked at Africa and saw something that many others either ignored or underestimated. Potential. Not potential next year, not potential 5 years from now. Potential over the next 50 years. A continent with vast natural resources. The youngest population in the world. Rapid urbanization. Growing technology adoption. And some of the fastest growing economies on the planet. China concluded that Africa's importance would increase dramatically in the decades ahead. And it acted on that belief. The roads were part of that belief. The railways were part of that belief. The ports were part of that belief. The investments were part of that belief. Everything pointed toward one idea. Africa matters, not just today, but tomorrow. And perhaps that is why this story is attracting so much global attention, because the rest of the world is beginning to reach the same conclusion. American companies are investing. European governments are investing. Middle Eastern investors are investing. Indian businesses are investing. Global institutions are investing. More and more people are starting to see what China saw years ago. The future growth of the global economy may not come from places that are already wealthy. It may come from places that are still rising, and few regions have more room to rise than Africa. Of course, the future is never guaranteed. Predictions can be wrong, projects can fail, governments can make mistakes, opportunities can be missed. But one thing is becoming increasingly difficult to deny. Africa is no longer being viewed as a continent on the sidelines. It is becoming a central part of conversations about trade, technology, energy, resources, manufacturing, and economic growth. In many ways, the question is no longer, why is China investing in Africa? The real question is, why did so many others wait so long to notice what was happening? Because this story was never really about China. China was simply one of the first major players to place a bet. The real story is Africa, a continent of extraordinary challenges, extraordinary opportunities, and a future that may be far more important than the world once imagined. And if China's gamble proves correct, the biggest headline of the 21st century may not be China's rise, it may be Africa's.